Going on, guys? We are holding the daily 5 SMA right now. So, one thing I'm looking at here, 22,877 is what I'm going to be looking at. 1 hour chart on the left-hand side of the chart. 5-minute time frame on the right-hand side. Market's just been kind of drifting the downside again, kind of figuring itself out from the long weekend. Nothing really to push us up or down at this point. Now, I would be interested in shorts again if we did lose Friday's lows and we started to close below the daily 5 SMA. Other than that, this is just going to be a great opportunity to hold the long over 22,877. It's a great opportunity to hold along over 877. So we'll kind of keep that on watch for the short time being. I do have 20 SMA and VWAP supply sitting at 22,921, 22,940. Again, about 30 minutes away from lunchtime right now. So, you might see a little bit of a push higher into lunch, followed by some consolidation. And then maybe later on in the day today, we kind of give this up. But if we don't give up this daily 5 SMA, then, definitely want to stay a little bit more on the cautionary side and maybe look for those long bounces, right? So assuming that this holds up. Now, if it doesn't hold up, the daily 5 SMA, if the daily 5 SMA does not hold up, then 100% we could sort of shift our momentum and our bias to the short side. That next macro support is 22,675, which is your daily 10. So all in all, on days like today, you want to be a little bit more patient. You want to be more patient. ATR on a 5-minute time frame is 22, so you're definitely going to want to, cut your targets down. So if you're normally looking for 25 points, maybe that's cut in half. If you're normally looking for 12 points, maybe that's cut in half. If you're normally looking for 5 points, then I would kind of stay in that spot right then and there. But definitely don't want to risk 30, 40 points if you're looking for 10 or 5 points, right? So we want to kind of try to keep it in line with the ATR. Again, be dynamic. So be flexible in terms of, hey, maybe you took a really good trade and on this particular trade you made 12 points and on this trade you made 20 points, right? Don't get hell bent and stuck on, I need the 20 points, right? Or I put on a trade that worked and I only put on 10 points of risk. So now you're trying to throw 10 points of risk on every single trade. Again, get a feel for the market, get a feel for the price action. I always like to start the day off trading a little bit smaller size, maybe 2 or 3 micros max. And as I kind of get a feel of what the market wants to do, and I can kind of see a little bit more, bigger levels start to form, then, if there's something that confirms later in the day, you can try to attack that with a little bit larger size because you have a good feel of the market and the price action of how it's moving. Okay. Right now, it's a little tough to kind of judge what the market wants to do based on the fact that Thursday, Friday were both half days. And Thursday, we had a little bit of a push up. Going into Friday, we had a little bit of a pullback right to where we started. And then obviously on the 4th, we really didn't do anything at all. So the market is just still in that same kind of holding pattern right now. Again, the way that it looks to me is that if this does hold a daily 5, it's a great back test. It's a great spot for, maybe we start to break this downwards trend that we put in for that holiday trading. So if I was to kind of drag a trend line down here, if you start pushing back up over 23,000, you can definitely see a nice little, breakout for just continuations of running all-time highs. Now, if you see price action start to get rejected once again, and then it closes back down below your daily 5, and it starts to give up a previous day's low, well, typically you're going to want to be on that side of the trade. Always remember, guys, technical analysis 101. If you take out a previous day high, you want to be long, or you want to be looking for longs. If you take out a previous day low, you want to be looking for shorts, or you want to be short. That's technical analysis 101, as simple as it gets without getting into the inside dynamics and metrics and, you know, getting into too much details. That's one easy thing that you can kind of stick to is, you know, intraday, if we're trading below the previous day's channel, well, then, you know, you're looking for those bounces to continue to go short and vice versa. When you are stuck in the middle of a previous day's range, that's when you know that your trades have less likelihood to work out, and they also have less likelihood to, you know, maneuver fast. And there's a higher probability that you might get stopped out on trades that on days where we're outside of the previous day channel that work very, you know, what seems to be easy. So just kind of understanding those key and core concepts will definitely help you for the long run. It will definitely help you over time, and you know, it's something that you can kind of build into your trading plan and trading model. So, you know, just kind of continuing to watch the price action here, 22,925 to into 22,940. That's a little bit of a tough holding pattern there. The only way that I would be interested in something like that is if I was already long, right? Is if I was long off of this attempted back test of this daily 5 and I'm long somewhere in here with using that daily 5 as a stop. I really wouldn't want to be starting a position here, even though this is setting up a 20 SMA trade. I definitely on something like this will let it go, just due to the fact that it's just way too close to that VWAP for me to want to get involved. Realistically, I would like to see it not only close over the 20 SMA, I'd like to see it close over 940 as well, which is going to be VWAP. So in a particular case like this, you just kind of let things go and you wait for the breakdown of the daily 5, or you wait for the confirmation over 20 SMA and VWAP. Because one thing I'm also noticing as well is every time we get these little bounces, it comes right into the 20 SMA and VWAP, and then it gets rejected, right? Look at it here, look at it here, here, and you know, is it going to happen again? We don't know, but it's happened so far in the first 2 hours off the market. And this candle right here is something that signifies to me, this is a little bit of a pause candle, maybe a redirection candle where, okay, we had a little bit of relief off of some selling. We're back here into supply, and it looks like some sellers stepped in here and decided to kind of push this back down. Now, if these buyers continue to blow out the sellers that put in this previous, let's call it doji candle or you know, inverse hammer candle, then you're looking towards the next area of supply for rejection at 22,940. Again, it's not to say that I want to be long into 940 if I wasn't already long down here, but it's something to maybe just wait for to see, okay, do we test the next area of supply? And does this area get rejected, or maybe I can find a good short position back down to the middle of this range? Also, an aggressive move that I do want to point out is taking these shorts off of the rejection of a 20 or a VWAP, where you wick above and then you close back down. You get short now, like you're already in it or you're getting short now, and you're using right here as a stop. Right, this is your stop, and then you're holding this until you make some cash. Again, whether it's 5 points, 10 points, 15 points, whatever it may be, whether you want to hold it to see if we test the low of day, that the choice is yours. But your clear out is over 22,930, and you're sitting short here, and you're trying to squeeze this position. You're trying to squeeze this short position, get in, get out, get green, go about your days, right? So again, if we break and hold over 22,930, you get out of that position. Again, this is a little bit more of a riskier trade for, I would say, advanced scalpers who are playing this price action, but it's just something to kind of maybe take note of, because maybe in the future, once you build up more screen time and you have more experience with the price action and you're a little bit more comfortable, these would be setups where you're interested in trying to fire a short position and grab some points. For example, once we got back down below this 20 SMA, that price was 919, 19, and we went all the way down to 912. So can you scrape 5-6 points off that? Yeah, sure, right, sure. But you need to be experienced, because if this does start to explode back over 930, you can't have a deer in headlights look where you tell yourself, oh man, what do I do? Let me just hold it a little bit longer to see if it comes back. Typically, when you start to do those type of things is when things don't come back and you end up taking a much bigger loss than what was expected. Okay, so again, to me, playing price action this way is a little bit more of a feel. It's a little bit more of a 55% chance that the trade works out and I'm able to squeeze a little bit of cash out of it. And then there's about, 45% of the time where it doesn't work and then you take a loss. But that's something that you have to live with. You have to always live with the outcome of whatever happens once you get into these trades, because the analysis should have been done before we click the button. The idea, the plan should have been populated before we entered into the trade, if that makes sense, right? So you shouldn't be surprised if you're stopped out, because it was always an option. You shouldn't be over the top excited that the trade worked out in your favor, because that was always the option. You already knew that one of those two probabilities was going to happen. So when you start to live and trade by that type of mentality, your trade to trade outcomes don't necessarily feel so emotional. But it does take some time before it starts to feel comfortable, if that makes sense. And given that, kind of switching topics, given that we are trading, in this little bit of a range, okay, and we've really failed to close over the 20 SMA in the VWAP and actually hold, especially on a higher time frame, like the 1 hour time frame, about 80% of your positions today should have been short. And if you just look at some of our methods, the 20 SMA trade, well, look at how beautifully this 20 SMA worked to the downside. Look at how beautifully this one worked to the downside, right? So this was two very, very clear trades that, if we're looking for and waiting for them, would have been one and done, two and done trades. And now you're kind of out in the wild doing your own thing, living your life, because you identified something that you trade on a day in and day out basis, and it worked out, and you expected that outcome to either happen or not happen, and you were going to be completely content with the outcome. So, having that patience and that skill level and that discipline to just be okay with the potential outcome. Guys, look at, no one's ever going to win 100% of their trades. We know that, right? Now, can you go into a day where you win 100% of your trades? Absolutely. But when you start to take a large sample size, 1 week, 30 days, 60 days, 90 days, you're going to have some losers in there. And it's to be expected, but it's just how well we manage those losers is what's going to determine, whether you're realistically going to be in business in the next 6 to 12 months, or you're going to be, saying that day trading is a scam and, the price action this, and, President Trump that, or, the news headlines this, or whatever excuse that you want to make for yourself, tends to creep in when people, they don't put in enough time in actually operating the system that they put forth for themselves in the beginning. And I've always realized that a lot of people will build out these trading plans and do really well for a short amount of time, and then when things start to not maybe work out as they did in the beginning, or maybe something changes in terms of the market conditions, it's just kind of like, oh well, you start throwing in the towel and doing a bunch of stupid stuff, and eventually just burn yourself out and blow yourself out, and you go about your business. But again, this is a skill set that you'll be able to possess and do for life, right? You can generate money for life. You can definitely do this from anywhere in the world as long as you have a Wi-Fi connection, internet connection. So, you know, it's definitely something that I would pursue in terms of trying to take serious and actually building out a solid business plan for yourself, and really focusing on that emotional state as well in the beginning. But again, just, you know, kind of quickly wanted to jump on here onto this live call and definitely just give a little bit of an update on as to what I see potentially happening. Again, just to kind of round things off, if we hold 22,878, you know, maybe you're going to look for those rejections at supply, or you want to be holding long but somewhere from the bottom using that daily 5 SMA as your out. If you're looking for longs, I would like to realistically see us reclaim the VWAP at 22,940 before I start to really look for those long positions. Maybe even a break and close over that with a back test that holds, and then look to go long, and then you start targeting some of these prior swing highs from these wicks earlier in the day session. Remember, always reference your higher time frame. We do have a downtrend here on this 1 hour time frame. If we do start to break and close over 23,000, then we do have a lot of open skies to just kind of continue to push highs. And remember, look at your hourly chart because it's going to be a little bit more clean and clear. If we do start to close below that daily 5, we've got a lot of selling pressure that you can see us definitely falling down to the daily 10. So with that being said, guys, I'll wrap this video up. I will upload it so you guys can reference it later, but I'll see all of you guys on the trading floor.